Hello and welcome to the Market Wake Up. My name is John. I am one of the co-hosts here, and we are here to clear up the macro mumbo jumbo so that you can get to trading. Today, I've got a really interesting commitment of trader report signal to go through. I don't know where Jordon is today, so I'm hoping he might come back on at some point. But get in the chat, say hello, let me know where you're from. I may need your help today to bring up some of the topics. We're obviously going to digest a lot of what's happened with the election as well. So let's get into it. Welcome. It is Thursday, the 7th of November, 8:30. Well, actually 8:34. I waited a few minutes to see if Jordon came in, but he hasn't come in. So I'm hoping Jordon's okay. If you're watching this, Jordon, from somewhere, hello. I hope you're okay. I haven't heard of him this morning, so I'm hoping Jordon is all right. But yeah, we're going to go through what's happened over the election. I'm going to discuss a really interesting big bite today. Everyone knows I'm very anti-euro in terms of looking for the opportunity to short that market for a while, but might be changing my mind about that now. Interesting commitment to trade report and seasonal play that I'm looking at. So that's going to be the big bite today. Jordan's not in today, so he's just messaged me saying he's not in today. I thought it was tomorrow he wasn't in, so it's today. So it's just me for the next couple of days. Who have we got in? We've got Ajay, welcome. Hello, Louis, as well. The important member of the team is here anyway. Absolutely. Welcome, Barry. Hope you're doing well. Marina, hope you're doing well as well. Hello, Malcolm. Let me know, guys, as well. Did anybody catch the live stream over on the Trade Delicious site yesterday? Let me know. Want to get your thoughts on that, what you thought of the trader toolkits and whatnot. But I'm going to get into some stuff then, and just to kind of make it a little bit more interesting today, so you're not just looking at my face, we're going to be going over what's happened and what's coming up. So market leftovers, what has happened? Well, very interesting development over the election, right? Donald Trump is the winner. Let me just bring this screen in for you. Donald Trump is the winner of the election. He will be the next president of the United States for his second term. And he actually won by a fairly decent margin, right? Fairly decent margin in the end. There was expectations that this would be a little bit more of a coin flip, and in my opinion, I thought it was going to be a bit more of a coin flip. But he won sort of in Donald Trump fashion, right? That's the only way we can kind of put it. So yeah, he took a lot of the swing states as well. Michigan ended up being Donald Trump. If we just have a little look, we can scroll down the screen and it'll kind of show us here as well the swing states and how they kind of play into it. So we had Nevada and Arizona are still reporting. Nevada is 90% of the way there, and at the moment Donald Trump is leading there 51% to Harris's 47.2%. Arizona, Trump is way ahead with 69% of the reporting there, so he could take a lot of the swing states here, Michigan being one of those as well. Most important was Pennsylvania, and as soon as he took Pennsylvania, I think for me that was the big moment where I was like, that's very interesting. You get 19 electoral votes in Pennsylvania. That's why it's considered the most important in an election night. And they have, he won that comfortably. I mean, 50.5% versus 48.6%, over 100,000 votes more than Harris. So very interesting to see that Trump won, although the bookies and the betting markets were suggesting that he would win. We did a poll asking you guys what you thought, who would win the election. You were absolutely nailed on correct. 80% of you went for Donald Trump in the end, I saw on our community poll. So thank you for voting on that. And yeah, so the interesting thing with the election though was he going to get the red sweep? Right, red sweep is basically, would he get the House, will he get the Senate? And he did, right? So if we just scroll up here as well, you can just look at the Senate. 52 to 44, 50 for a majority. So they've got the Senate. The House is the one that we're really looking for as well. So at the moment, we don't have all the votes in just yet for the House. If you look down on the right-hand side here, we've got US House. And it's going through still a lot of reporting to happen. So he might not get the entire sort of sweep as what we're expecting here, but he's on 206, 218 for a majority. And that's going to be something that's impactful for us going forward into markets, okay? Because it's going to be, how is this going to play into the fiscal policy that comes through? How is this going to impact what the Federal Reserve to do? And I'll talk about this a little bit in Freshly Squeezed this morning. So who else have we got in? Malcolm as well. Louis enjoyed the show yesterday. Thank you. That's good. I'm glad you enjoyed it. Barry, BOE expected to cut rates. Yes, we'll talk about that very, very shortly. Barry as well was reading an article on Bar Chart saying Trump tariffs will increase inflation, so less likely federal cut rates. What's your opinion? Yeah, that is something that I wanted to kind of touch on as well. And Tapiwa, I hope I've said that correctly. Good morning to you as well. Yasser as well. Good morning. Is Trump winning good for markets? And essentially, it's good for some markets, bad for others. Okay. And we can see that if we just go over to the charts, we can see what has been performing pretty well and what has not been performing well. For one, dollar index rallied, so the US dollars performed pretty well. Why has that performed well? Well, the bond market basically fell aggressively. If you look at taking a look at the bond yields in the market, we can see the 10 years up towards 4.2%. If you look at the 2-year bond yields, up to 4.2%. And if we look at the 30-year yields, they're up at 4.6%. So usually I like to look at where the 10-year yields are going in terms of kind of positioning on the US dollar, as well as the 2-year. 2-year is what's known as the short end of the curve. If you ever heard that terminology, that's what the 2-year yield is. And the Federal Reserve are the ones that kind of look at the short end of the curve, because that's kind of what's going on in markets right now. And the bond market is falling, so yields are moving higher, and they're up towards 4.2%. Now, the current interest rate in the US, I believe, is at 5%. I'm a little bit rusty on the old interest rates at the moment, actually, because of all this election chatter. But if we just go over to our trusty calendar for today and scroll down, we can see that the US dollar is on 5% interest rates at the moment, and they're forecast to cut. So is Trump winning good for markets? It depends which market you're talking about, because yields are up. That's going to be good for the currency. So US dollar is up. If you take a look at what happened in the cryptocurrency space because of Trump's victory as well, we saw Bitcoin move higher into, I believe, all-time highs. That's 75, 76K level, starting to come off those highs a little bit. But I think the crypto market especially is going to do pretty well. I don't know if you guys trade stocks. I'm not a big stock trader myself. But if we go and have a look, Coinbase gapped up higher as well. I mean, it was trading at sort of 194s, gapped up into the 200s, 255. So that move there, it gapped 13% and then kept running for a big move there, 32% in the end. So that's something that's quite interesting to me, because Trump is about deregulation, right? And for me, that's quite a scary term. When you expect things to be deregulated, that to me doesn't bode well for people in general. It makes me feel that investment vehicles and investment or institutions can almost get away with a lot more. So that to me, I don't particularly like from a personal standpoint. But if we take a look at that from a sort of how will markets be impacted by that, then maybe the crypto market will do a little bit better from that. I actually think regulation would be better for the crypto markets, but especially in the long run. But at the moment, the crypto space is about not being regulated by something. It's about not having a central exchange and all that kind of stuff. So Coinbase is doing really well off of this. Whether these moves will last, that is the question as well. But this is the sort of thing. If he gets the House and he gets the Senate, then his fiscal policies that he'll be able to push through will be able to do it a lot quicker than he would if he didn't have those things. So I think the more shocking thing to the markets at the moment is the fact that we've had this red sweep, essentially. So Coinbase is doing well. Bitcoin's doing well. Markets kind of breaching into all-time highs there on Bitcoin. I mean, when Bitcoin does well, all crypto assets tend to do pretty well. So I think that's a positive if you're looking for any kind of positives of the Trump trade, essentially. One market that was interesting to me was Tesla. Now, that might not be shocking to a lot of people, but Tesla shares jumped incredibly on the Trump victory. So originally it gapped pre-market by around 9%, ended up rallying to 15% on the day. And that is quite interesting because there's a little contradiction here with Tesla. So obviously, I don't know if you saw it, Elon Musk was going around and holding these kind of Trump rallies, doing some dancing on the stage, and then he was also kind of giving away $1 million to people at Trump rallies, which I don't know if he'll get him in a bit of trouble for that, but yeah, he was giving away millions of dollars at Trump rallies. Tesla stock has jumped on the back of that, largely down to the idea that Trump is going to tariff China heavily. And he's going to tariff electric vehicles from China heavily. So it's almost, in my opinion, is forcing Americans to choose US companies, right? That's what he's about. He's about deglobalization. He wants the American people to buy American, right? Buy in the United States, manufacture in the United States, and X, Y, and Z. Big believer of farming in the United States. So because of that, Tesla is well poised in the US market in terms of electric vehicles. Obviously, we've got Ford over there as well that do a lot of car manufacturing, one of the biggest companies over there. So it'd be interesting to see, actually, how did Ford come off the back of this? I haven't actually looked at Ford Motor Company. So again, Ford gapped up a little bit higher as well. So there could be a play here that if you're looking across sort of what is kind of good for the market in certain terms of Trump winning, then you're going to be looking across the board at those type of things like manufacturing, X, Y, and Z. So Tesla's done well off the back of that. Will that again continue? I'm a bit hesitant to kind of jump on anything like that. I think if we get some kind of pullbacks, then maybe it could be good to get long into those type of companies. But the contradiction with Tesla is the fact that Trump is kind of anti-renewable energy. He's kind of anti-electric vehicle because he doesn't believe the infrastructure is there either. So there's a slight contradiction there. Whether Elon's going to be the guy that kind of changes Trump's mind and gets Trump around to kind of the electrification in cars and X, Y, and Z, or whether Trump's just more interested in kind of SpaceX. I don't know if SpaceX has a ticker, if I'm honest, because I've never actually looked at it, so it doesn't look like there is. Must not be a public company. So Tesla's the only kind of one we can really kind of take a look at there. Richard's just come in and said Musk will have a position in the new government as well. So there we go. Maybe he's going to be the guy that turns Trump around from sort of into the sort of the electrification of vehicles. So we'll see what happens there. It might end in a bang, but we'll see. But Tesla did surprisingly well off of that. And, I think if you looked at this and said, oh, my God, I'm missing out on a move there, I'm going to go long here, I don't like it. I don't like it. I would much rather wait for this kind of move to sort of fill here, and then look to potentially being long, because at least then you've got some kind of trend establishment at that point. You know, the market's moving higher. Let me just change this pencil. The market's moving higher. You know, at least you can get some kind of establishment on a trend there. But interesting nonetheless. Jon, welcome to the show. And yeah, I trade FX metals and indices. So you're in the right place. I'm a predominantly an FX trader. So we're going to talk about the euro shortly. But let me just flip over to what's coming up for today into Freshly Squeezed. So Freshly Squeezed is the part of the show where we talk about what's coming up for today and what you should be interested in going into today's trading. And because my lovely co-host Jordon isn't here today, and he usually runs you through the prices, I'm going to do it for you. But we're going to go through what is coming up for today first, and then we'll go through some prices, and then I'm going to go through euro, US dollar on the big bite today. So what have we got? We've got two really important events today. We've got the Bank of England interest rate decision as well as the US interest rate decision. And typically, if I looked at this calendar at the start of the week and said, wow, this is a heavy news week, I would be long US dollars, because usually when we get these heavy news weeks, long US dollar is the way to go. Looking at what we've got today, though, Bank of England expected to cut interest rates to 4.75%. This will be very interesting to me today, especially with the MPC official bank rate votes. How are they voting? So basically, there's a scoring system in the UK, and there's 9 voters, and they vote to either hike interest rates, cut interest rates, or hold interest rates. The last time shocked markets a little bit because 8 of them decided to hold. So we held at the 5% level. We've cut to there's potential cuts for 4.75%. I think that's what we're going to get if we go take a look at UK interest rate decision, as well as the UK bond market. Let me just see if I can open this up. Bonds, here we go. Bonds have started to creep back a little bit higher, especially on the sort of 5-year bonds in the UK, but the 2-year bonds are still around sort of 4.5%. So the reason why this has started to rally is because of the budget that came out in the UK. I don't know whether this is the... Okay, yeah, this is the UK gilt ETF. So gilts were dropping here. And typically when gilts fall, the Bank of England will not cut interest rates. They will tend to leave rates a little bit higher. If you look at the yields are going through the roof as well. Technically, that would be a way for a central bank not to cut interest rates. So it's going to be a very interesting day today. I think the Bank of England will cut to kind of bring it in line with what we're seeing at the moment in the bond market. But it's the question of what will they do after that. And I think that's what's going to be on everyone's mind. Very similar to what's going on in the US at the moment. Potential cut to 4.75%. I mean, there's a 0 interest rate differential here on the pound or in the UK and the US. So there's not really an edge in trading that market at the moment, in my opinion. So if they cut as well to 4.75%, it's not necessarily what they're going to do in this meeting. It's what they're going to do in the next meeting. Because if we go take a look at the CME Fed Watch tool right now and see where that is positioned, there is a 100% chance of a rate cut today, but they're pricing in more of a 25 basis points cut. So if you come down and look at this little area here, you can see that it says target rate. It'll tell you where the current target rate is and where we're expected to go. So there's a 98.9% chance that we're going to see a 25 basis points cut today. So to me, that is interesting. It's where we go in December. Okay, so it's where we go in December. Now, again, the market at the moment is 70.8% in another 25 basis points cut. But I don't know whether this will see a change, especially after obviously the Trump victory, because there could be potential for that. But we have to consider as well, Trump's coming in. Is the market going to play the Trump trade straight away? Because he doesn't technically come into power until the end of January. Okay, so he doesn't take the White House until the end of January, so he can't necessarily implement anything right now. So I think the market is going to still stay data dependent until that. Obviously, we've seen some labor market pressures in the US, so I still feel like the Federal Reserve are aiming for the soft landing, so they're going to cut interest rates again, but it's December's going to be a bit of a tricky one. If we go take a look at January right now, they're pricing in again, you know, some more cuts to come, potentially 29.2% for a 25, but we're leaning more in January that the Fed aren't going to cut. I mean, we're not going to know anyway if Jerome Powell's going to be sticking around, because Trump doesn't like Jerome Powell, so he could be gone. So let's get into the big bite. Any questions, guys? Let me know about the analysis so far. Any kind of opinions? But I'm going to get into the big bite because I've got a really interesting one today. Okay, now the big bite today, let's change the mood. It's going to be about the euro, and that may shock some viewers. If you're very familiar with the channel, I've been talking about short euro for a little while now against most currencies, because the German economy hasn't been doing great. Okay, and I felt like that was the reason why the ECB were cutting interest rates and were cutting aggressively. So I wanted to be short euro dollar. Pretty much been looking at short since this white line here, which was the commitment of traders signal to go long on the US dollar. And the market has fallen through. Now, we were getting this little bit of a pullback, which was interesting to see. I was hoping that we would kind of touch back up into the 1.0950 handle for a short, but it didn't happen in the end. Instead, price kind of stayed around the 1.0930s before, you know, moving aggressively lower over the Trump election win. So, interesting little area of support though. Now, why am I interested in the euro? So if you're familiar with the channel and familiar with the way I do analysis, what I like to look at is the commitment of trader reports. The commitment of trader reports show us where hedge funds are positioned in the market, large speculators. They also show us where commercials are positioned. Commercials are in the markets for business purposes, whereas hedge funds are in the market to make money. Okay, so they're speculators. Now, using the Markets Made Clear software, we can see that there's a 100% signal in here. Okay, now that doesn't mean 100% win signal. Okay, it just means there's a 100%. And what it's telling us is over a 36-month, 18-month, and 6-month period, that contracts from the commercials are the highest they've ever been in terms of longs. Okay, so if we look at what's going on into the data here, we've got the 36 com index, which we don't really need to look at, but it's the commercial positions here that I'm interested in for one. And we can see the commercial positions net, so that's the difference between the long and the shorts, is 31k. So that is very similar to these levels here. It's actually higher than these levels here, back towards the sort of middle to end of January 2022, where price did eventually find a bottom in September and then rallied higher. Okay, so that's something similar like this could be unfolding. Where are the hedge funds positioned? They are aggressively short. They are short levels we haven't seen since 2022. These little lows through here. Now, when I say little lows, this chart up here is a weekly chart. Okay, so this was trading below parity in 2022, which was 1, and then the market went all the way up into 1.1. Okay, so there was a significant rally in price in 2022. Now, if we kind of look back, the sort of biggest level that I can see where we were aggressively long was up here. Okay, so that was back in 2020, but we all know what happened in that 2020 kind of blip through there. That was COVID in here. So can we really judge that one? Okay, but if you look what happened after that, the market rallied again significantly. So I like this for one or two reasons. Now, if I bring over some data from Seasonax, okay, so we'll take a look at Seasonax. This is a seasonal play that we could be looking at as well. So over a 24-year period, towards the end of November, so around the 22nd of November to the 30th of December, Euro US dollar prices can rally. Okay, and over that period, there's a 75% win rate. If we have a little look over the years, we have to go back to 2016 where this lost. Okay, so we've got significant data here suggesting that this pattern has been successful from 2017 to 2023. If we have a little look at the sort of average annualized return here as well, 20.25%, average return around about 2%. Now, if we take a quick look at the chart, 2% return would be pretty much recovering that sort of Trump initiation there. So that's 1.69%. 2% is up towards this little resistance zone in here. So a couple of little things to have a little look at there. You've got a commitment to trade report signal, which I put a lot of weight on. And we've got a potential seasonal play towards the end of November. Now, I talk a lot about COT signals and how we can kind of use them, but I'd never really show you how I would trade it, okay? So what I would be looking for is technical confirmations now. Technical confirmation for me is a consolidation, okay, with a breakout. That's one. So a bit similar to what happened down in here, or if we get a few days of consolidation and then the market kind of breaks into new highs. Because then what I will look for is a higher low situation, and I'll look to try and trade that move. I also put a lot of weight into my stochastics. So at the moment, my stochastics are bearish, but let's say they come and do this, right? I'll be looking to then go onto my hourly time frame and basically look at sort of breakouts of patterns, just to kind of show you as well what that looks like. I'm going to go a little bit over time today, guys, so I apologize for that. But there's this little move down through here. This was a move that we were looking to trade. One of my strategies, if I go to an hourly chart, is to look for kind of breakouts of consolidations and things like that. And if we just take a look at this, you can see that we had like a nice little sort of triangle pattern in here that broke to the downside. Again, kind of an upward trend consolidation that broke out. These are all kind of patterns that I would be looking to trade on the way down. That one to there's a bit of a funky one. Probably wouldn't have traded that, to be honest. Plus, there was an aggressive move lower. So reward to risk would have been a bit skewed there. But that's the way I like to trade these moves. I like to wait for my daily to kind of show me what's going on. Does the daily kind of match my conditions and my bias? I talk about this a lot, the WCS method. Why do we want to be in a position in the first place? Well, we've got commitment to trader backing and a seasonal backing. Are the conditions there to trade that move? At the moment, not right now. So I have to wait for my conditions to be met before we get involved with this. Barry makes an interesting point as well. German coalition government looking fragile. Any collapse will tank the euro. Yeah, political uncertainty will not be great for the euro at all. So yeah, that's also something you have to take into consideration. But the problem with that is you don't know that's going to happen or not. So that's the only bad side of trading macro, is sometimes you don't know what's going to you don't know what's going to happen, for one, and for two, it's difficult to judge the data initially, because we get a lot of the data sort of after the fact. So I put a lot of weight into the commitment to trade reports, because I believe as well that they do the macro research, and they do a lot of macro research. They have hedge funds, so they're going to be doing a lot of that stuff, and that's where they're positioning. So I like this potential on euro US dollar. So that's my big bite for today. I'm not going to leave it with a take it to go, but I don't know whether anybody went over to the Trade Delicious stream yesterday. If you did, then the Trader Toolkit is over there. Tomorrow, I'm guessing I'll be on my own again. I thought I'll be on my own tomorrow, not today. So I got my days mixed up. So I'll just double check with Jordan, and if Jordan's back, then we can obviously have a little bit of banter again, and a little bit of chat about the markets, because we've got an interesting day coming up tomorrow. So thank you for everybody for joining me today. I'm going to leave it there. Hope you enjoyed the show. We have a lot of new viewers today. So if you are new here, we live stream every weekday, 8:30 a.m. I was going to say British Standard Time, but GMT now, because we've just gone back an hour. So GMT, we break down sort of the macro mumbo jumbo, so you can go and trade the data. So thanks for joining me, guys. I appreciate you all. Hope you have a great day, and I'll speak to you tomorrow. Cheers.